Hi, and welcome to Random Rogers Big Picture for the week of March 2nd. We're going to talk mostly about the stock market, and depending if there's time left over, one other thing. But let's hop right to the stock market. I was pretty much away all day on Friday, so did anything happen? Okay, that was a humor attempt. Obviously, it was a nasty day. I mentioned something during the week about not being too fond of necessarily muni bonds, from the standpoint of there could be wild things in the price if the bailout or whatever it is with the insurers falls through. And while it didn't fall through, it seems to be on a little less steady ground than maybe it was perceived to be or maybe it was reported to be. And so the market had a nasty reaction to that. Presumably that was the cause. It doesn't really matter, because if it wasn't that, if you believe it's a bear market, then it would have been something else. So I don't think it really matters. But one thing I did want to talk about was, and this is kind of a recurring theme, that the way in which this bull market, I'm sorry, I misspoke, the way this bear market has started, just how textbook it is. It's astounding to me, actually. And so first thing I want to talk about was just one thing that I mentioned a long time ago was something called the 2% rule, which I kind of picked up in my brief stint at Fisher Investments, which basically one indication of a bear market is an average of a 2% decline 3 months in a row. And that kind of speaks to a rolling over action, bigger picture, rolling over of the market as opposed to it starting with a panic. So for the month of November, the market was down I'm talking about the S&P 500. The S&P 500 down 4.3% in November, down 0.8% in December, down 6.1% in January, and this month it looks like it was down 3.4, almost 3.5%. Those first 3 months, if you average them together, is a decline of 3.7 per month. Over the 4-month period, it averages a decline of 3.6%, if I'm figuring correctly. So, looking at taken individually, none of those are horrible. That 6.1 number in January is kind of a big number, but there was a fair bit of emotion, a fair bit of panic. But during February, we had a couple of feel-good rallies. Part of the normal bear market process is feel-good rallies, and that's what we've had along the way. One thing in watching the coverage on TV, is this part of the bottoming process? Oh yeah, it's part of the bottoming process. Bottoming is probably the wrong word. It's part of the bear market process. It doesn't make sense. I should probably email the guys at Bespoke to do a little digging, but if we ever had a now 4.5 month, going back to October 9th as being the peak, a 4.5 month correction, aren't they always much shorter or much longer? My hunch is that they're never 4 or 5 months long. They're always much shorter, much longer. That's my hunch. Maybe I will email them and see if we can get an answer. So, they continue to ask the wrong questions. One little tidbit I heard today was someone in giving a bullish case for stocks, and a lot of them do try to grope and feel and find the bullish case, is stocks are relative to bonds. The value is much better in stocks. Okay, well, that's true. Bonds are about, if you look at the yields, bonds are about as expensive as they can get, or have ever been. Maybe that's a better way to put it. Okay, so that's kind of true. And stocks are now, 15% from their high? The exact number doesn't matter. So technically that's correct, but there's nothing forward-looking about that says that just because one thing is cheaper, that it's going to go up. This is, I'm still convinced, is going to be a normal bear market. Pretend for a second that's correct. Then what that means is we have quite a few more months, not forever. If it started in October, if it's 12 months, obviously that means next October. So the range of maybe 9 to 18 months, let's use that as a range for a bear market. That kind of implies sometime between July and April of 2009 before it really does bottom out. Who knows when that will be? And again, that all assumes it's normal. If it is normal, well, you've been through normal plenty of times before. If it's not as bad as normal, let's pretend that, the Silver Lining crew on CNBC has it right, that it's not a bear market, it's not a recession, we are finding a bottom here. This is the bottoming process. Well, you clearly have lived through much worse than what it would be if now is the bottom. Let's put it that way, if the bottom is already in. If it's worse than average, let's say I'm wrong, and some of the doom and gloomers turn out to be correct, that it's as bad as Rubini says. How about that? Let's put it that way. If it's as bad as Rubini says, okay, well, we've gone through that a couple of times throughout history and survived. One other thing is, if the worst case that I've read anywhere is true, it's the dollar is going to disappear and all of these bad things. Okay, well, you know what to do. If you really think that it is the end of U.S. economic system or whatever, sell it all and buy gold and buy a bunch of foreign currencies. Your portfolio, if you do that, if you're right, which I don't think that's going to happen, but if you believe that is the case and you're right, well, your portfolio will be just fine. Then you just need to worry about, getting access to food and the like. I guess I'm drifting into Michael Pansner's book, that Financial Armageddon book. I don't think that's going to happen. I think this is going to be within the range of normal. I've said that repeatedly throughout. If I'm wrong, well, too bad. But I'm positioned in such a way, the things I've been writing about, and hopefully, you've taken some sort of defensive action. You have some sort of, mechanism, tipping point that tells you when to get defensive. You listen to it, and hopefully you're not feeling the pain as badly. And as I just say that phrase, feeling the pain, I want to kick myself for saying that, because that's how they talk on TV. And the idea of assigning emotion to this is the worst thing you can do. This is just a cycle. That's it. It may be worse than normal. It may be like normal. It may be better than normal. But it's just a cycle. That's it. Assigning emotion to cycles, to me, is very counterproductive, and that's one of the big themes of the blog. That's about it. Public service announcement. College lacrosse is back on ESPNU. Happens every March. March, best month of the year. Spring training, college basketball, college lacrosse. Not too shabby. So even if you're bummed about the market, there's still positives out there.